Mike, can you explain the difference between stop on quote, stop limit on quote, and trailing stop losses? Yes, Bald Eagle, it would be my pleasure. So there are different ways, there are different types of stop loss orders. A stop on quote, that is a stop loss that once it is triggered, turns into a market sell order. A stop on quote means you're going to set a price, $68.80. Once the stock trades at $68.80, not $68.81, once it trades at $68.80 and a trade is actually executed at $68.80, your stop on quote will immediately turn into a market sell order. A market sell order means it is just going to sell into the bid, whatever is the price on the bid at that moment. You are just going to sell at that price. That's a stop on quote. That is what I would recommend that people do use when you are setting hard stop losses. Stop limit orders, I do not recommend that people use stop limit orders, because stop limit orders, once triggered, turn into limit sell orders, not market orders. The problem with that is if a stock is falling to the downside quickly, you may not actually get filled on your stop limit. So let's say you put a stop limit order, $68.80. The stock drops to $68.80. Once it goes through $68.80, you will then put a sell order at $68.80. But if the stock has already traded down to, let's say, $68.78, you're still in the stock and you're not going to get out until it goes back to $68.80. But if a stock is in a complete free fall, you can just sit at $68.80 and the stock can just keep going down further, $68.50, $68.20, $68, $67.50, and your order is still sitting at $68.80. I do not like when people use stop limit orders on a slow moving stock. Fine, it's not usually a big deal, but on a stock that's moving around quickly, or if a piece of news comes out, or if there's a big sell for whatever the reason, there is a possibility that you never actually sell the stock. That's why I don't recommend stop limit orders. Then you have trailing stop losses. Trailing stop losses is where your stop loss is not at a particular price. Rather, it is a distance from the current price of the stock. So as the stock moves higher, your stop loss will move higher with it. But as the stock moves down, your stop loss will not move down. So let's say if you set a 50-cent trailing stop, let's say the stock is at 69 cents and you set a 50-cent trailing stop. When the stock's at 69, your stop loss will be 68.50. Now, let's say the stock goes from 69 to 69.25. Your stop loss is going to move up from 68.50 to 68.75. But now if the stock goes from 69.25 back to 69, your stop loss is not going to move down. Your stop loss will only move up as the stock moves up, but will stay put if the stock moves down. And that way, as the stock moves up and then the stock starts to pull back and then moves back up again, your stop loss will move up with it, so that your stop loss will move higher with the stock until the stock rolls over and then eventually stops you out. So that's a trailing stop loss. Okay, big differences between those three different stop loss orders. Great question, Bald Eagle. I'm glad you asked it. I hope that helps answer your question.